Everybody, let's work a connect problem together about bank reconciliations. So what I want you to remember is a bank reconciliation is taking two incomplete pieces of information, your incomplete piece of information and the bank's incomplete piece of information, putting them together and coming up with a complete piece of information. Okay? So we have to, the most important thing to remember is who knows what and who needs to inform the other party of what's going on. Okay? So the first thing we need to do is figure out what our statement is. So remember, we're the depositor. So we're going to have a balance per the bank and a balance per the depositor. And then we'll come up with adjusted balances for both, and they should be equal. Okay? So when we look at this particular problem, we look at first, number one, the ledger account for cash showed a balance at July 31st of $125,568. So if the ledger account for cash balance is $125,568, whose balance is that? Is that mine or is that the bank's? If it's a ledger account, that is my account. I am the depositor. So the balance per the depositor is going to be $125,568. So let's go ahead and just take note of that somewhere. And then I look at number two and I see the July bank statement showed a closing balance of $114,828. So if it's the bank statement showing a closing balance, that has to be the balance per the bank statement. So I'm going to go into my bank reconciliation statement. Balance per accounting records, that's me. That is, I'm the depositor. So this has to be the balance per the bank statement as of July 31st. So our balance is $114,828. So now, if we go back to our notes, one of the first things the bank is not going to know about is a deposit in transit. So remember, a deposit in transit is something, say, is a deposit, say, that you leave, in this example, in a night depository. Until the bank actually gets that in their records, there's no way they can know about it. So the cash received on July 31st amounted to $16,000. It was left at the bank in the night depository chute after banking hours on July 31st, and therefore was not recorded by the bank on the July statement. So they probably aren't going to know about it until at least August 1st, depending on whether or not that's even a business day. Okay? So if we pull down, we know that's a night depository. That has to be a deposit in transit. Okay? So it was $16,000. So now, go back to our notes. What else does the bank not know about? So we look at number 6. So who writes the checks? So number 6 is a comparison of the paid checks returned by the bank with the entries in the accounting records revealed that check number 821 for $519 issued July 15th and payment for office equipment had been erroneously entered in Banner's records as $915. So that is something we need to deal with later on. So number 7 is where we need to go. Examination of the paid checks also revealed that 3 checks, all issued in July, had not yet been paid by the bank. Number 811 for $314, number 814 for $625, and number 823 for $175. So what those checks are checks that you, as the depositor, have written. So who knows about those? Well, you do. You wrote them. So you have to adjust the bank balance by those checks because there's no way the bank can know about them yet because they haven't shown up there. Okay? So we need to go look. Oh, there's add outstanding checks. So we know number 811 was first, and it was $314. And I think we need to enter that as a negative number. There we go. And then number 814 is also outstanding, and it was for $625. Again, entered as a negative number because that's deducting from our balance. And then number 823 was for $175. Okay, so we go back and look at our fact pattern, and so we've dealt with number 3. Number 4 doesn't apply to the bank. They would know about that. A credit memorandum, the bank would have issued that, so they would know about that. The paid checks returned by the bank, so we'll talk about that here in a minute. Number 8, the non-sufficient funds check. Who's going to know about that? The bank has to know about that. There is no way the depositor can know until the bank tells the depositor that the check did not clear. The depositor has no way of looking at someone else's bank account. Okay, so we know that we'll need to adjust the depositor's bank records for that non-sufficient fund check. So looking there, it looks like all of our adjustments for the bank side have been done, so we can move on. So our adjusted cash balance, so remember we're going to have adjusted cash balance for the depositor, so we know that if we don't come up with a balance of $129,714 for an adjusted bank or adjusted depositor balance, that we need to make some corrections. Okay. So now we're looking for the balance per the depositor, which would be balance per accounting records, July 31. Okay. So we look at our fact pattern, and the ledger account for cash showed a balance at July 31 of $125,568. So I'll get that put in there. Now, check number 821. 821 is a little problematic here. Alright, so this is number 6 in our fact pattern. So comparison of the paid checks returned by the bank with the entries in the accounting records revealed that check number 821 for $519 issued July 15th in payment for office equipment had been erroneously entered into Banner's records, our records, as $915. So we transposed $519 into $915. So we're actually to the good. We recorded that as being more expensive than it actually was. So the bank didn't need to adjust that because they got the check with the correct amount. Our records are the ones that are incorrect. Okay? So we recorded that check as $915, but the actual amount was $519. So that means we are $396 richer than we thought we were. Okay? So our balance has been adjusted accordingly. So now we need to look at, let's see, we've worked through number 1, number 2, number 3, now number 4. Also included with the July bank statement was a debit memorandum from the bank for $50 representing service charges for July. So who's going to know about the service charges? The bank. The bank is the one that charged that particular amount, and so our records have to be adjusted. Okay. So we're going to go look, and we know that service charges are going to take away from our balance, and so we're looking for a deduction. So deduct service charges, and again that needs to be entered as a negative number. And now, so we've dealt with 1, 2, 3, 4. Now number 5, credit memorandum. So we have a credit memorandum that was enclosed with the July statement that indicated a non-interest-bearing note receivable from $4,000 from Renee Maines left with the bank for collection had been collected and the proceeds credited to the account of our company, Banner. So since it was left with the bank would have known about it, but we don't. So our records need to be adjusted. So we go up into Connect, and we see that we need to add that note receivable. And it's going to increase our balance, so that's going to be a positive $4,000. All right. Looks like we're almost there. So we've adjusted for number 6. That was our incorrect equipment entry. We've taken care of our checks on the bank side. So now it looks like number 8 is the last thing we need to deal with. So included with the July bank statement was a $200 check drawn by Howard Williams, a customer of Banner. This check was marked non-sufficient funds, or NSF. So if somebody wrote you a bad check, it had been included in the deposit of July 27th, but had been charged back against the company's account on July 31st. So the bank would have known that that was a non-sufficient funds check and it would have removed it from the account. We can't know about it until the bank tells us. And so this end of the month statement is what's telling us that we have that non-sufficient funds check. So we know that's going to deduct from our balance, and it was for $200. And it looks like we have a adjusted cash balance for our depositor of $129,714. And then we go back and look at the adjusted cash balance for the bank, $129,714. So we are in good shape. So again, just to sum up, when you're doing a bank reconciliation, what you're trying to do is take 2 incomplete pieces of information and make them complete. So you have to remember who knows about what. So if the bank charged it or something was delivered to the bank, then that is your bank statement's probably going to reflect those particular numbers. If it was something you did, like write checks, then that's going to be something that you're going to know about and you need to adjust the bank balance accordingly. Okay, so if you go back and look at the notes for the chapter, go look in the PowerPoints. There's actually a slide that sums up exactly what adjustments you're going to make to either the depositor or the bank statement. So if you have any questions, need any help with anything, don't hesitate to shoot me an email. Talk to you later. Bye.